Welcome to the Accendo Traders Group. This is our weekend wrap-up trade plan for June 29th, 2008. AccendoTraders.com. Effective trade plans delivered daily. And as we get together each night, we have a little routine that we go through to make sure we're on the right side of our trades. We want to make sure we know what's coming down the pipe that could move the market one way or the other. But on the weekend, we do a couple things to make sure we know what market sentiment it is. We read some blogs and we check sectors for trends up and down. Again, we want to make sure we know what's going on in the market so that we can scan for our new trades and set alerts. And as always, we will make sure that we have time to spend with our family. So on the economic front, we had the Dow, all the sectors down big. That's not a surprise. 9 out of the 10 sectors ended in the negative territory for the week. And can you guess what sector was positive? Well, if you said oil, and more specifically the sector oil is in, which is energy, you are correct. Energy is the only sector that ended up for the week. Basically, when we look at the market sentiment and what pulled us down, there are some concerns in the S&P 500 with the financial sector, which of course leads the S&P. We had the Dow down to its lowest points at September 2006, and we're going to talk about that when we get to crude. And then in the NASDAQ, we had less than stellar outlooks given by some of the big tech companies. We had RIM this week and Oracle. So certainly the sector, the indexes had a negative outlook for the week. The FOMC policy really did what we expected to do. As we all know, leading into that meeting, all of the comments from the Fed governors and the chairman were saying that they weren't going to cut rates. They also said that the inflation risk remains high, and then they said that the downside economic risks have diminished. Is that right? Okay, if you say so. And that the inflation risks have increased. Getting back to the S&P 500 in the financial sector, we kind of had a backyard playground tick for tack thing going on. The Wall Street firms were downgraded. First, we had Goldman Sachs downgrade the whole sector from neutral to underperform. So then Wachovia cut Goldman Sachs. Then Credit Suisse cut JP Morgan and Merrill Lynch. You can see also Goldman added Citigroup to the conviction sell list. Crude up 104% from this point last year, and that's obviously taken a big hit on all the sectors and companies that depend on oil. Airlines, over the last month, we've heard airlines, raising their fees, charging us for bags, and many of them are cutting flights. And then the industrials down 6%, and even Boeing was added to the conviction sell list by Goldman Sachs. So certainly, oil is driving the market. Economic was pretty much a wash this week, and I say that just to say that it's not what controlled the market. Personal income spending had some good news. Many people think that's due to the stimulus package. The GDP is ahead of the second quarter estimates for right now. Durable orders was flat, and then home price decline is slowing. Is at a slower rate right now compared to previous months. So not saying that it's good, it's just that it's slowing down. So again, certainly a week of some bad news and negative market sentiment. This week we have some more economic news coming out there, but we've got the jobs number coming out on Thursday, obviously with the holiday on Friday. So tomorrow we got Chicago PMI, nothing really on the earnings front. I mean, I had to really dive down and find the Apollo Group and Family Dollar had earnings this week, but really there's nothing going on this week on the earnings front. And then there are our split plays. So let's go ahead and take some time and look at our sectors. Okay, let's begin to look at our sectors. We can start off here with hotels, and you can see definitely bearish. Basic materials, by definition, still bullish, but you can see it's in a consolidation pattern here. We need to see it break out one way or the other to really determine the sector, which way it's going. But definition bullish, but consolidating. Utilities, bearish. Builders, bearish. Casinos, who has money right now, definitely bearish. Coal, one of our bullish sectors, but as we kind of zoom in here, you can see that we've got some wicks up here that we're trying to break out of. We'd like to see the coal sector get above 1350, but definitely bullish. The banking sector is bearish. You can look at that downtrend. Biotech, leaning bearish, but you can see this consolidation pattern that it's been in, and the buyers have come in here. So it's bearish, but again, it hasn't broken out, so it's really neither. Drugs, bearish because it's still making lower highs, but you can see it. We kind of bounced here, so I'd like to see it break that before I go all out. Internet's bearish, broke some key support here. Last week we said by definition bullish, but we're definitely gonna go bearish now. Gold, leading bullish, but you can see a nice little W pattern going on here in this consolidation. So bullish, but it is consolidating, so we need to see it break out above 205. Software, definitely negative, bearish. Insurance, bearish. Look at that. Oil services, bullish, but you can see it's also consolidating, and our favorite stock, USO, kind of shows that. Retail, negative, bearish. Stocks now going down with the NASDAQ, bearish. Transports, bearish. We talked about that, down 6% for the week. Brokers, bearish. Natural gas, by definition, bullish, but you can see also this one is consolidating. And oil index is also bearish. Okay, now we're ready to begin the education portion of our video. We're using the book Trading in the Zone by Mark Douglas. Taking responsibility and shaping your mental environment is the section of the book that we're on, chapter 3. And when we last met, we talked about attitude produces better results in trading than market knowledge. And, you know, I think a lot of people get that confused. A lot of people think the more that I know about the market, the better trader I will be. And Mark Douglas and I think we say the more you understand the market, the more you understand your relationship with the market, the better trader you will be. Not the more information that you'll have. And typically, the more information you have, the more clouded your understanding of your relationship with the market gets. You know, it's one of those data in, you got to lose some data to stuff that new data in. So I know this seems more difficult for a lot of people to believe because they're saying, well, you know, I'm learning all these new indicators. I'm learning all these new strategies. Why doesn't that mean that I'm going to be a better trader? And again, because if you don't have the right attitude, when you have that first big loser, and we all have them, and some of us still have them, you know, without that right attitude, that loss can send you down into a world of hurt and emotional pain. Also, when we're in a trade that's in the wrong position, without a trade plan, without a checklist, without something that drives your decisions, your market knowledge of indicators doesn't mean anything because mentally you're making bad choices to stay in a trade that you should have been out already. Now, what's interesting about that is that there's an anomaly that having a trade, especially a winning trade on your first time, it gives you the feeling of, you know, empowerment. And that's the feeling, that carefree attitude, that carefree mindset is the mindset that we're talking about that you need to be a successful trader in the market. However, although those few winning trades can send you into that state of mind, that is a warped mindset because it's based upon luck and not about a trade that you can reproduce and have another winning trade after it. But so many of us were so conceited. I remember when I first traded and I started trading BTU and I started doing really well with it. Or more importantly, how many of you have, you know, followed newsletters like me, you know, and you had a winning trade and you're like, ooh, I'm going to trade everything this guy or this lady says. But, you know, you can't reproduce that, you know. So next thing you know, you start losing money, you start losing trades. You don't understand why you're losing it because your foundation, your mindset, your trade plan was not reproducible. So, again, winning trades, especially if you start off winning, is just a recipe for disaster, both emotionally and financially. So, To get the full version of the podcast for our YouTube folks and MySpace folks, there's our link, accendotraders.com. Subscribe to podcast.com. That will get you the podcast, the full version, which is about 30 minutes long. If you want to buy our daily podcast, our daily video, is buynewsletter.html, which is the link so that you can get our Monday through Thursday video. As always, we appreciate those who give us feedback. And here's our blog.accendotraders.com. That's our new blog.accendotraders.com. Trading on risk, and I will see you guys tomorrow.